Welcome to Property Focus. I'm Kate Miller. Making headlines this week, investors are spoiled for choice as mortgage lenders fight for borrowers' business and consumer sentiment levels remain worryingly low. But first to our lead story. The weather may be heating up, but buying and selling activity remains subdued. According to the latest auction results from APM, just 57.4% of properties listed for auction in Sydney cleared over the weekend of September 17. Similarly, 57.1% of properties listed for auction cleared in Melbourne. Just 72 properties were sold under the hammer in the Victorian capital, compared to 428 properties during the same week last year. Raine and Horne CEO Angus Raine told Property Focus the spring selling season would be later this year.
A lot of vendors are waiting to see what their neighbour's property does. So all it does at a very local level, at a street level, all that needs to happen is one or two positive results in a lot of major markets, and you'll see this sort of effect that people then say, oh well, maybe it's time to put our own property on the market, which means there'll be a delayed spring. And I think, depending on what the RBA does, the $1 million question, I think there's going to be a delayed spring which will go all the way through to sort of December even.
Confidence levels among Australians remain incredibly weak. According to the latest Westpac Melbourne Institute Index, consumer sentiment increased by 8.1% in August, but remains frail compared to previous years. Speaking with Property Focus, RFI Director Alan Shields said that consumer confidence is actually lower now than it was during the depths of the GFC.
We're now into 9 months without a cash rate increase or decrease or anything, but people are just expecting, they just want some movement, I think, and it creates uncertainty. And then you add into that the whole cost of living. Inflation is running at 3.6%, so that's not too bad, but when you drive to the supermarket and you pass the petrol station, it costs a lot of money to fill up your car, and bananas are still expensive, and your gas bill is expensive, and your electricity bill is expensive. And I think what's happening is just all of those things are conspiring to make consumers worried about how much money they've got in their pocket at the end of the month.
Competition between the major banks is continuing as the banks compete for their share of the home loan market. Earlier this month, the Commonwealth Bank said it would beat any mortgage offers advertised by any of the other major banks until the end of September. Despite the big banks offering some of the most attractive interest rates in years, borrowers should not forget about non-bank lenders. InTouch Home Loans' Paul Ryan told Property Focus.
The average rate of the majors is still 7.79. Our own rate, InTouch, is 7.22. So the non-banks are 40 to 60 points below the major banks. They've all got pro-packs. The funding is very, very strong. So absolutely there's a place for non-banks, and there needs to be. Otherwise it's just going to be all about the banks, and we know what happens when they own everything. So the non-bank sector is live and well.
And the October issue of Smart Property Investment magazine is now on newsstands. In today's market, which represents the best investment, real estate or stocks? We'll reveal which investment packs the biggest punch. Plus, find out how multi-millionaire Joseph Chu used property to go from modest migrant to $25 million magnate. All of this and plenty more in the October issue of Smart Property Investment magazine. Pick up your copy today. And that's it for Property Focus for another week. I'm Kate Miller. See you soon.